All right, what's up, guys? So I'm back with another video, and today I just want to kind of talk about how I'm going to be approaching Bitcoin from here. So most recently, we kind of discussed a little bit about how to negate emotions. I also have a video out that is something along the lines of like why price action is a snowball. And if you read my Twitter bio, it says I trade trends and I buy supports. So personally, I just simply buy massive support levels on Bitcoin, right? Or these like high time frame support levels on Bitcoin and Ethereum, just simply because they're support and I don't mind investing into those assets. I'm able to justify that mindset based off of these are historically uptrending assets. And depending on who you ask, right? Some people might tell you, no, Bitcoin was created in what I think 2009. I'm not actually sure. I think it was 2009. If I'm wrong, then obviously I'm a LARP, right? But Bitcoin was created in 2009. Ever since then, it has historically uptrended. Something more along the lines of SPY. Obviously, that has historically uptrended. I don't think anyone's going to look at SPY and tell you that you're an idiot for investing into that over the long term, kind of just buying when it goes lower, not really thinking too hard, maybe just dollar cost averaging your way in, whatever, right? No one's going to really tell you that you're a complete idiot for dollar cost averaging or investing into SPY. Some people might tell you that you're a complete idiot for Bitcoin because what 13 years or whatever isn't long enough to convince them. And that's perfectly fine, to each their own, right? But to me, I am perfectly fine with buying the not dip. I am buying the downtrend, right? There's a big difference. So I am buying these like historically relevant support levels and these high time frame support levels, not because I'm bullish, but just simply because it's support, right? And long term, 5, 10, 15, 20 years from now, I don't care what price I bought Bitcoin at. I just want more Bitcoin 20 years from now. Right. So that's it. And then that exact same mentality puts me in a position where I'm not anticipating a bottom and I'm not trying to be the hero stepping in front of the train. I'm not trying to be a genius, guard dog barking at the wind, right? I'm not being that person, but I am buying the quote unquote dip, even though it's not a dip, it's a downtrend. So I bought this 200 weekly EMA around 27K. And ever since then, we have bounced about 20%, I think, at maximum. So it's been beautiful, right? I'm sitting very comfortably. I got to sell on the way up. I got to take some profit at around 30K, which is like if we were to come in and draw a very random, obscure, imaginary gray box, right? So I'm selling this region and then I will look to sell the next push higher and maybe even the next push higher than that until eventually I don't have anything that I showed at 27K, the 200 weekly EMA. And now I have to start building a brand new starter position and kind of work my way into the market that way. Not so much being an investor at that point, right? At that point, I'm not the person who's just buying support. Now I'm trading the trend because I'm selling at these resistances on the way up, but we're cracking through each and every single resistance, right? So all of a sudden, it's not just resistance in the form of I'm expecting a new downtrend and continuation from here. Now it is, hey, the trend is actually up. So I need to get back into the market with the bulk majority of my trader account, right? So kind of delving into how I'm going to justify doing that and how I'm going to manage my position from here on. If we don't go any higher, and that ends up, this local retest or whatever ends up being the exact top before I get to buy the 200 weekly EMA all over again, and the 200 weekly MA, and the next weekly demand zone, and the next one, and the next one, right? And I'm just continuously buying, not because I'm bullish, but because I'm just simply a buyer of support levels on the way down. I'm an investor, and on the way up, I'm a trader, right? So, how am I going to be determining when I need to take some profit, maybe add on to my longs, right, and compound on the way up? And it goes back into that most recent video where I discussed like how to negate your emotions, right? So on the weekly time frame, everyone should be able to look at that chart and tell me we are in a downtrend. So that's not always the most actionable analysis. So you want to zoom in a little bit further than that, right? On the daily, it takes you 4 seconds to analyze this price action and tell me we are in a downtrend, right? Again, I don't give a shit how you're doing that, whether it's a VWAP, moving averages, market structure, random trend lines, volume analysis. I don't care, right? But you should be able to tell me within 4 seconds of looking at this piece of price action, we are downtrending. So let's zoom in. Does this argument of we are downtrending continue on lower time frames, right? So let's go to the 4 hour. And the 4 hour, we can say, well, not really, right? I mean, this piece of price action, yeah, it's like slanted downwards, kind of, but we can kind of see how, like, more recently, we're starting to go sideways. So when we zoom in further and further and further, what's the new trend analysis here? Well, the trend analysis is there is no fucking trend. There's no trend, right? If you're making a market structure analysis in this circle that I just drew, you have hated your life for the past week, right? And if you're making a moving average analysis, even though on the hourly, it's not that bad, right? We haven't really reclaimed anything. So we still technically are using these hourly 200 moving averages as somewhat of a local resistance. And like trend resistance, we're continuously getting rejected off of them. But when we dive in even further, let's go to like the 15-minute. Are moving averages, market structure, any other trend analysis, is that usable here? Is it useful to you at all? Is it alpha? Is it edge? No, not at all, right? It is totally useless when we break up out of these 15-minute 200s. And to kind of give you a little bit of a context, right? They acted as this beautiful local trend resistance to a very exaggerated trend, negative 30%. And all of a sudden, when we reclaim them, you should think, oh shit, that's a reclaim of the local trend. That's the same thing that has acted as resistance for the past week and negative 30% on very low time frames. So the fact that we reclaim it here means maybe a bigger relief bounce. Maybe this is a local bottom. Maybe it's a macro bottom. Maybe it's a generational bottom, and you're never going to get to buy any lower than that. And Mercury's bids at the 200 weekly EMA did end up being, oh shit, he's a fucking genius, right? He bought the generational bottom. Let's all subscribe to his paid group or whatever. No, it's not any of that. And you would assume that, right? And you would kind of scale it, and you can scale it however exaggerated you want. But eventually, we just break back down. So then us breaking down makes you think, oh shit, that was actually the local top. And this is not the bottom. We're probably going to continue the exact same trend that we've had for all this week and all that negative 30%. We're going to continue it right here, only for us to reclaim the 15-minute 200s again, right? So at this point, now you should be in a, oh, okay, we're not trending, right? We're not trending anymore. We trended for the past week and even more than that on higher time frames, but we trended, we trended, we trended. All of a sudden, we're no longer trending. We went from having one trend for 1 week over the course of negative 30% to now we've had a new trend, a new trend, a new trend in 2 days, right? One trend in 1 week to three trends in 2 days. That should kind of tell you something. So at that point, if you're still approaching with a trend style analysis, you're going to hate your life. And this is exactly why. So we end up going sideways, right? We end up going in forming this like kind of range. And I portray it in the form of a range. If you've seen my very sardonic tweets lately, I've also portrayed it in the form of VWAP, right? So volume weighted average price. And I just anchor it from kind of where the beginning of the range nearly starts. And that kind of shows you the exact same thing. You can use Bollinger Bands. You can just simply take a look at these moving averages and tell me, hey, we're just kind of chopping above and then below and in between and back above, right? And there's no trend. You can portray it however the hell you want to portray it. But at this time frame and at this point, you should be able to tell me within 4 seconds of looking at price we are now going sideways, right? So from there, once you finally develop this understanding of we are going sideways, and whatever that means to you, and to me, it just simply means that since I'm portraying it in the form of a range, then this is range highs, this is range lows, and I should expect range highs go to range lows and into range highs. This is a little bit of a deviation. We fall back inside the range. So in hindsight, that's the deviation, and we should expect what? Range lows. And from range lows, we should expect what? Range highs. And from range highs, range lows, and from range lows, range highs. So what are we expecting here? Range lows, right? And it's the exact same winner's mindset that we've had for all of these other tests as well, as opposed to assuming a trend, right? Assuming, oh shit, this is the breakdown. Oh shit, this is the breakout. Oh shit, this is the breakdown. Oh shit, this is the breakout, and getting absolutely chopped the hell up, applying a trend analysis where there is no trend, hating your life, right? So after you come to this conclusion that we are going sideways and the trend is there is no trend, then you can scale those assumptions into either direction on higher time frames. And let me kind of tell you what I mean by that. So if we go back to the hourly chart, obviously at this point we know that we're in a range. And if we end up breaking outside of the range, what's the new analysis, right? It is, oh shit, we're not trading sideways anymore. We have established that we're ready to expand away from this range. At that same time, we're also reclaiming the local trend of like the hourly 200 moving averages. So we can expect, hey, yeah, Mercury is going to get to take more profit on his 200 weekly EMA buys, right? And I am going to get that next test of our next most relevant trend would be something like the 2 hour 200s, or maybe you want to use the 4 hour 200s, or maybe you want to use a gray box or a trend line or whatever, however you're justifying it, right? At the end of the day, it's all arbitrary. Um, so that's how we're able to justify it, is that within 4 seconds, we would be able to tell, hey, we're not going sideways anymore. And then what does that mean? And then we can scale that assumption into those higher time frames and then say, okay, yeah, we're still downtrending on the weekly and like the daily, but our 4 hours uptrending, our hourly's uptrending. We should anticipate white space into whatever the next arbitrary level is for us so we can take profit on that bigger relief bounce, right? And then if we break down from the range, what's the new assumption from there? Right? If we break down from the range lows, this is, oh shit, we're not trending sideways anymore, right? And we have established a new trend. And at this point, we should anticipate that we're going to get to buy the 200 weekly EMA all over again. We will be able to bid it. And not only that, but we will also be able to bid the 200 weekly MA. Why? Because at this point, the trend amongst all time frames is bearish once again. So if you break out and above the range, you build a snowball of strength, right? And this goes back to that other video that I was previously mentioning. You build a snowball of strength. And that should kind of make you think that we have now allowed for that snowball to roll down the hill and potentially become a full fledged snowman at best. That would be a generational bottom, right? But you would think that that snowball at least rolls to become a little bit bigger until it either hits a tree or right? So it hits the tree, and then we smack our face in the 2 hour 200s and just continue downtrending all over again. Or we scale that snowball even bigger, and now we have like the body of a snowman, right? And then maybe up here is our new trend or a random obscure trend line that you might have, or whatever, right? A gray box, and now we have a full-fledged snowman. And now at that point, the analysis should be bullish amongst every time frame, and you should not be anticipating further downtrend amongst basically any time frame except maybe the weekly, right? Which it probably wouldn't be too locally relevant at that point. um, and then the opposite side, right, is that the snowball kind of just melts and we go back into, we don't have any bullish argument for Bitcoin all over again, just like we didn't have for any of this price action and any of this price action. This was the only real exception where we had even a tiny little glimpse of strength on any time frame, and every other piece of price action was just we had a snowflake of a bullish argument. There wasn't much there, right? It would go back into that very same kind of environment. So this is how I'm going to be looking to play the range and kind of scale my assumptions. I'm not trading the range, but I am using the range to kind of determine what should my next move be. Should I just continue holding my 200 weekly EMA buys, or do I need to kind of get rid of them, hopefully in profit, right? Hopefully, I catch it when it's still in profit. I need to get rid of them, and I'm going to get the chance to buy the 200 weekly EMA all over again, and potentially the next lower demand zone, your support level, lower than that, and lower than that, and lower than that, and lower than that. So we'll see what happens. This is how I'm approaching the market. Hopefully, this adds some clarity to my tweets and kind of gets rid of that sardonic kind of vibe behind them. But yeah, I hope you guys enjoyed the video. Please like, comment, subscribe if you want more videos like this, all that YouTube influencer bullshit. Also, my ETH BTC or my ETH and BTC donation links, because a lot of you have asked to donate to me, are in the link in the description. And that's awesome. I very much appreciate that. There's also a Bybit referral link in there, which probably none of you have used. I haven't really looked. But if you want to support me, then go use all that stuff. Very much appreciated. Of course, not guarantee or not necessary at all whatsoever. I'm going to keep making these videos regardless. But yeah, thank you guys. I just need to move out of my parents' basement eventually and afford avocado toast during the bear market. So that's really about it. As long as I can do that, then you guys will get more videos.